Hi guys, our goal now is to revise AS10 in roughly about 10 to 15 minutes. It's a big standard and very important for exam also, but very easy scoring one. AS10 basically talks about property, plant and equipments, life of this asset. Even if you're watching for first time learning, it's very helpful for you guys. It talks about life of an asset, like how a human being from the time when he is born till our death, what all happens in our life. Like that for a PPE, from the time a PPE is purchased or constructed, comes into my books, then during the life of the PPE, lot of things can happen, like depreciation, like revaluation of that, subsequent expenditure, already purchased, again incurring some more expenditure on the same asset, and replacement of asset. Let's say in a car, a part is being replaced, and lastly end of life, end of useful life. How will the asset leave my books? That means first when asset enters my books, my entry is going to be asset to bank or cash or creditors, whatever, until the asset leaves my book, until I make it to asset. Either I will debit P&L or I am selling it a bank, whatever. Are you following? Derecognition means how it is going to leave my books. It will leave my books either because I have donated to somebody, I have given gift to somebody, or I have sold the asset, or I have scrapped the asset, whatever. So the entire journey of the PPE is tapped in AS10, and we are going to see accounting for all of this. Are you following, guys? So first let me start off. Initial thing is, first we're going to go in the same journey when I purchase the asset. When you purchase the asset, guys, very simple. Whatever expense is necessary for the asset to reach your location, to reach your factory, to reach your house, all that I will capitalize. Sir, I am buying an AC, sir. Not only the AC price, the delivery charges, the installation, I went in cab and bought the AC and came, all that expense needed for the purpose of asset will be included. So first definition of asset is what is going to be included, inclusions and exclusions of definition. But before that, we should also see definition of a PPE. They are saying PPE is an asset. That PPE can be used in production or supply of goods or rendering of services. How PPE is used in production? Let's say production of Apple phones, plant and machinery. Supply of goods, trucks, lorries are supplying goods. That also PPE. For rendering service, yes, I'm using this iPad camera for rendering a service class. All this will become PPE in our balance sheet. PPE can also be used for rental to others. What do you mean, sir? I purchased the house, I'm giving on rent to others. Rental income from my PPE. PPE, first 2 points talks about generating income or used in generation income. Next is straight away used for administrative purpose. For example, admin room, chair, or let's say lights or other AC or admin purpose. And not expected to be used for more than one period. Sir, I am purchasing one calculator, sir. I will use for 6 months and throw it. Not a PPE. PPE used for more than one accounting period and not held for sale. If you come to my class and tell, sir, I want to buy this camera, sir, it's very nice, I'm not going to sell it to you. It's not held for sale. So PPE, what are the essential points, guys? Used in production of goods, supply of goods, rendering of service or rental to others should be there, or admin purpose. And additional D and E are additional points, more than one accounting period and more than not held for sale. If it's held for sale, it becomes inventory as per AS2. Are you following, guys? Then they are saying AS10 not applicable for biological assets like cow. How do you value a cow, guys? Cow, how will you depreciate a cow? So biological assets and wasteful assets like KGF gold mine, all these are not included in the value of PPE. But what is included is bearer plants. Bearer plants become PPE. Simple, take mango tree. Mango tree is a classic example of bearer plant. Mango tree is bearing agricultural produce. So it is used in or supply of agricultural produce, mango tree. Expected to bear produce for more than 12 months. Yes, mango tree will have produce for more than 12 months and remote likelihood of being sold as agricultural produce except for scrap. Nobody will sell the tree as it is. They will only sell the waste of tree after its life. So are you following? Is something that is going to bear agricultural produce will be bearer plants. I will come to the doubts in the end. Let me quickly revise. Now you know what is a PPE. When you purchase a PPE, the next step is to know what I will include and what I will exclude, sir. Inclusion is very simple, guys. anything that is going to create value and create future economic benefits I will include. First I told for the asset to reach my factory, that only is purchase price. Price paid for vendor for it to reach my factory, eliminate all the trade discount, etc. And it includes what, guys? And it includes what? Apart from that, any other directly attributable cost for it to reach my factory, for it to any installation cost, all of that. Okay, I'm coming and doing some modifications, all of that. Decommissioning, restoration and similar liability is very simple. Let's say I have installed a plant in the middle of the ocean. Government is saying after 10 years you have to remove this plant. For that I'm going to incur expense after 10 years. The present value of that will be capitalized today as an asset. Are you following, guys? That's called decommissioning. So inclusion is three things: purchase price, directly attributable cost, and decommissioning. Exclusions, I will simply tell you. Can I say marketing cost is included? No. Can I say promotion expense is included? No. Opening new facilities capitalization or no. Training of staff, is it PPE, guys? No. So don't mug up all these exclusions, guys. They will just give a list of things in exam. You should know what is included and what is excluded. Be aware of that list. So what are the ones exclusion? Opening new facility, inauguration cost, introducing a new service, promotion, conducting business in new location, staff training, admin and general overhead are not included. Just be aware of these points. One more list of exclusion under directly attributable, a secondary list of exclusion. Just be aware of these points. Look at this. Initial operating losses. I started business, I have initial loss. That is cannot be capitalized. That's a loss. Are you following, guys? Relocating, shifting of office, that is not to be capitalized. And cost incurred when item operating in manner intended to be brought by management at less than full capacity. Very important point. PVR theater, 500 people can sit, sir. But now I'm testing. So I'm testing some new sofa set. So I'm saying only 50% occupancy during COVID. Now 50% occupancy due to COVID, less than full capacity is not my fault. It has to be done for whatever reason. So because I'm operating in less than full capacity, I will not capitalize. Are you following, guys? That loss I'm getting. Sir, my classroom, sir, first class I'm taking 100 students can come, but I'm allowing only 10 students. That's my fault. I cannot capitalize the loss. Are you following, guys? These are exclusions. Are you understanding? Because these don't create future economic benefit. What I will include, these are things that are needed. Employee benefit, labor, I'm constructing building, labor cost is needed to build the asset. Cost of site preparation. So to construct building, trees there, let's cut all the trees and destroy the earth. Site preparation, that site preparation cost. Then initial delivery and handling installation cost for it to come. Then how to build, sir. Architect is having some charges, professional fees. Then lastly, there will be some testing fees also. Whether asset is functioning properly, prototype built, testing for it to make it marketable. That also I will capitalize. So first page we are done, guys. Quickly what we have learned here. PPE is included for production of goods, supply of goods, rendering of services, rental purpose, not held for sale, used for more than one accounting period, and also for admin purpose. Does not include biological and wasteful assets, but includes what? Barrier plants. Then we have a huge list of inclusion, exclusion. Logic here, until asset reaches my building, I will have my inclusion, that's called directly attributable cost inclusion, and decommissioning cost. Excludes all this marketing, initial operating losses, all that will be excluded. This is initial recognition. Come down. Initial recognition of an asset is simple. When I am first time recognizing asset in my books, asset to bank, that time initial recognition, I should only follow cost model. I should recognize only at cost. Subsequently, after initial recognition, in the future, I can follow cost or revaluation model. Cost na keeping the asset at historical cost, revaluation na doing frequent revaluations. Are you following, guys? Next. Now, measurement of cost in different cases. In different cases, guys. Let me tell you the cases. Self-constructed asset. Tata Motors is constructing new factory for electric. So the steel, cement will come from Tata Steel, Tata Cement. Correct? They are having Tata Cement, Tata Steel, then everything they have. Software TCS will give. So if I am constructing my own asset, what is the cost price? Can I take market price and capitalize or take cost price? Standard says take only cost price and capitalize. This is a special case. Next special case, for government grants, they are saying go see government grant standard. Then purchase price for a composite consideration. Very classic. In income tax, you have slump sale. Now imagine I am purchasing all assets together for a purchase consideration. Amalgamation, I am giving PC and buying, let's say I am giving 100 crores and buying the full business as such. Now how do I account this in my books? Just like what amalgamation tells, either at the price or if price is not ascertainable, they are saying the consideration should be allocated among individual assets in the fair value of individual assets. Sir, 100 crores I got the whole business, sir. It has 20 different assets, car, building, plant and machinery. In the ratio of fair value, I will allocate. Are you following, guys? Are you getting it? 100 crores I got one huge building. It has so many components. Split it using fair value. This is next. Next they are saying important one. If payment is deferred beyond normal credit terms. What do you mean by normal credit terms? Party has to pay within 3 months. He is paying after 6 months. So how much delay? 3 months delay. This delay can I capitalize? This delay can I capitalize? Standard is saying very simple. Go to AS 16. AS 16 allows to go and capitalize. Qualifying asset plus you are certain you will receive the amount. Go and capitalize. Okay. Fine, guys. Then they are also saying finance lease also go to AS 19. Not over here. Last one. Barter. This is basically barter, guys. I'm giving asset and getting asset. I'm giving one car, getting another car. Giving old AC, getting new AC. I'm giving old AC along with cash and getting a new AC. Most people do that. Here they are saying very simple. They're asking a question. They're asking, is it a genuine commercial transaction which is having a proper commercial entity? Then they are saying measure PPE at fair value. Plus or minus cash. Which fair value? Fair value of the incoming asset. Fair value of incoming asset. If not, fair value of outgoing asset. So, barter system ka fair value. Sir, very simple, sir. I am giving away my car which is worth 10 crores. And I am paying 5 crores cash. In return, I am getting a new asset for 10 crores. My entry will be simple. New asset account debit 20 crores. To old asset. How much, guys? 10 crores plus 2 I paid cash also. How much? 5 crores. Still how much is pending in the entry? Another 5 crores. That will be 2 gain on sale. Are you following? So if transaction has commercial substance, very simple. Incoming asset you write at the incoming fair value. Outgoing asset you write at the book value plus what you paid. Difference will be gain or loss. Easy. Are you understanding? Fair value, very easy. Account at fair value, difference will be gain or loss. If the transaction does not lack if it lacks commercial substance, meaning between friends I am doing, sir, between family I am doing it, then they are saying you will pass the same entry, but I will not account the new asset at fair value of 20. The new asset will be accounted at same book value of 15 crores, so there will not be any gain or loss. So that what they are saying, fair value of asset given up or received is not measured. So if you are not able to find a fair value, or if transaction lacks commercial substance, record the PPE at carrying value of asset given up. What is the book value? Book value is 10 lakhs. 10 lakhs is going, 10 lakhs is coming. That means there is no profit loss. So for me to summarize barter transaction, if it's a commercial transaction, fair value can be measured. Measure at fair value, gain profit loss. If there is no commercial transaction element or fair value cannot be measured, account at carrying value itself. New asset will be recorded at the existing carrying value, no gain or loss. These are 5 different cases that we have, special cases. Are you following, guys? Special cases in initial recognition. Now coming to all points regarding revaluation of asset, guys. Sir, revaluation, how frequently I should do? Asset value will keep changing up and down, sir. Highly volatile asset. Then do revaluation every year. Sir, asset is not highly volatile. It changes only once in 5 to 10 years. Then do revaluation once in 3 to 5 years. Are you following about this, guys? Clear? Next, sir, how to classify asset? Plant and machinery, furniture and fittings. Like that only I should classify? No. I can also classify office building 1, office building 2, let's say residential building. Within furniture and fittings, I can have sub-classification also. It is my wish. They are saying a group of PP of similar nature and use can be classified. We are known to learning land, plant and machinery, office equipment. Not necessary to do like that, guys. Within plant and machinery, I can have 3 sub-classification. 1 plant and machinery in India, 1 plant and machinery outside India. If you can split them based on similar use and nature, then we can have different classifications and have different depreciation rate for each class of assets. Are you following, guys? So first page we saw what is PPE, what is included and excluded. In second page, we are seeing different cases and revaluation frequency. That also we finished every year and once in 3 to 5 years. Are you following, guys? Next, the accounting treatment for revaluation. I'll quickly explain with a small example. Guys. If asset is 100, if this asset is 100, if it is revalued to 150, how much is the gain? 50 goes to my revaluation reserve. If asset is 100, if there is a downward revaluation to 90, what is my loss? 10 goes to my P&L, gain 50 goes to my revaluation reserve. Now after this 150 can again change. Again this 150 can become 170. Subsequently in future 150 can again become 130. 150 can again become 90. How to account, sir? Again became 170. Extra 20 will again go to revaluation reserve. Both gain. Second 150 became 130. What is the loss? 20. 20 you will debit what, guys? Revaluation reserve. So in subsequent loss will be first adjusted with revaluation reserve. And third case 150 became 90. What is my loss? 60. In this 60 up to 50 I can debit what, guys? Revaluation reserve. And excess 10 I will go and straight away debit what, guys? P&L account. Are you following, guys? Similarly this 90, sir, again this 90 is going to 110, 90 is going to 95, 90 is becoming 80. Okay. All 6 cases of revaluation. First revaluation, subsequent revaluation. 90 became 80. What is my loss? 10. Go and debit. Initially also loss, now also loss. Go and debit P&L. First loss of 90, but now 90 became 95. So I have a gain of 5. Where will this gain go? This gain will go to credit of P&L, because earlier you already debited 10 now. To the extent of earlier debit, I will go and credit only my P&L. Are you following, guys? And lastly, last case, common sense, it became 110. If you get this correct, you understood. 90 became 110. What is the gain? 20. This gain will be split into 2. Up to 10 will go to credit of P&L. Another 10 will go to revaluation reserve. So revaluation beyond original cost only goes to revaluation. So we are adjusting. Are you following, guys? Understood all 6 cases? Did you feel it's fast? No. This is how all the case will come in exam also. That's what I gave here. Revaluation, first time, subsequent time. That only I gave that in theory, guys. I thought theory or your simple sum will give you the full clarity. Are you understanding, guys? Easy. With this revaluation is done. Now coming to revaluation, what will I do with the balance in revaluation reserve? Let's say 100 rupees asset is revalued to 120, guys. What is my gain in revaluation? 20. This balance will remain in revaluation. When will I transfer to revenue reserve? When I will transfer to P&L is asking. When the asset is sold or disposed, then the 20 from revaluation reserve will go to P&L 20. Are you following, guys? Or during the life of the asset. This only we saw in impairment also, but let me quickly repeat over here. If asset is 100, my depreciation will be how much, guys? 10. Correct? See, if asset is 100, if asset is revalued to 120. If asset is 100, depreciation 10% vechkonga, 10. If asset is 120, depreciation will be 12. Now because of revaluation, this led to an increase in depreciation. Therefore from my balance sheet, revaluation 20, whatever is the increase, how much, guys? 2, this 2 I will transfer from revaluation to P&L, so that net effect will become 10. That means because of revaluation, if depreciation has increased from 10 to 12, such increase will be transferred back from reserve to P&L. Now read this statement, you will understand. When you can transfer the surplus, depreciation based on revalued amount 12. Depreciation based on original cost 10. The difference, excess depreciation, can be transferred back from revaluation to P&L on a yearly basis. This is option given. Are you following, guys? This is during life of the asset. So during life of the asset, some more things we have to discuss over here. Now we are done with revaluation. We are okay. Now coming to subsequent expenditure. So if I incur subsequent expenditure, simple, in the nature of repairs and maintenance, go and debit P&L. Sir, subsequent expenditure is going to increase the useful life of asset. It is going to give me more future economic benefits. Productivity is increasing. Efficiency is increasing. Then you will go ahead and capitalize. I will go ahead and capitalize. Sir, what about depreciation? Now in the life of asset, depreciation, in depreciation there are 3 methods, what we all know. Straight line method, diminishing balance only is called our WDV method, and units of production method. A straight line method you know better than me. Diminishing balance only is WDV. That also you know. Units of production method என்ன சொல்றாங்கன்னா, based on the ratio of output of units I will split it. Very simple over here. Which method to choose? The standard says you choose any method. The enterprise has to select the method that closely reflects the pattern of benefits that the entity is going to get, and whatever you choose you have to apply it consistently. We have to be applying it consistently. Are you following, guys? Then we have something called component method of depreciation. What is component method of depreciation? Very simple. If I take a house, guys, if the house is worth 50 lakhs, the household components will be, let's say, land and building 20 lakhs, furniture and fittings, let's say 20 lakhs, lift, let's say 10 lakhs. For example, guys, instead of depreciating the whole house by 50 years, I will tell land and building I will depreciate by 60 years. Furniture fittings I will just depreciate by 10 years because I have to replace. Lift I will depreciate by 5 years. So within an asset, instead of depreciating the whole asset for the same useful life, instead of depreciating the whole car for same useful life of 10, I will split the car into components: tire, engine, seat, glass, and each component will be depreciated for a different useful life. That's called component method of depreciation. We have very good sums also in depreciation. Are you following, guys? Clear? So with this, during the life of asset, we are also done with depreciation. I hope all of you are following, guys. Of course I'm fast, but idea is to complete in 20-25 minutes. Replacement of asset, very simple. Within an asset of 100, I am not replacing the whole asset. One lift is there, car is there, carless seat I am replacing. Okay, so if I am replacing the seat, very simple. In this 100, what is the value? Car value is 100. What is the value of the current carrying value of seat? Sir, current carrying value of seat is 20, sir. Remove this 20. I am replacing with new seat. Is new seat increasing my economic life? Yes. New seat is 30. So from my 100 I will remove 20, add 30. So revised value will become 110. So replacement of asset is nothing but in the asset that part of the carrying value you remove and add with the new asset or cost. Sir, new asset also came in, sir. Old asset also useful life 10. New asset also useful life 10. Hardly no change, sir. Then no need to do this. Go and debit the expense to my P&L account. No need to go and disturb the asset ledger. Are you following, guys? So now I have fully completed at the time of inception what I will do. During the life we have finished. The end of the life. Only last part that is left. That's called derecognition. End of the life, following things can happen. One is called retirement of an asset. Retirement of an asset is a very important concept where asset will still be there in the books, but I will stop providing depreciation. Are you following, guys? So retirement na asset is still there in books in PPE, but depreciation is stop பண்ணிடுவேன். Why? Because I am not using. Asset is retired. So when asset is retired from active use and held for disposal, it shall be held at lower of carrying amount or NRV. Lower of carrying amount or NRV. Let's say carrying amount in books is 70, NRV is 40. I will keep it at 40, whichever is lower amount, but I will not provide any depreciation. Are you following, guys? In some cases, if you are going to get compensation from third party, insurance is going to give compensation. That will also be included when you, like, let's say asset is destroyed. 500 crores asset is destroyed because of fire. Insurance compensation 100. I will reduce my loss with the compensation which is guaranteed. This is retirement of asset. Lastly, derecognition of an asset. When asset will leave my books, when I will pass the entry to asset and remove this from my books, guys. Very simple. In some examples, sale, entering into finance lease na, moving from AS10 to AS19, or donated na, debit P&L account, fully debit P&L account as expense and credit asset. Or if there are no future economic benefits from its use, then I will write off fully, debit P&L. Retirement I am not writing off. I am still keeping in the books for emotion. Old cycle, I will keep it for emotion. Here derecognition, asset value itself becomes 0. Depending upon the case, I will use that. Are you following, guys? This is in summary AS10, guys. So now when you look at the same thing, how I started off the standard, purchased, initial, what is PPE, what is included, what is excluded. During the life, different cases of depreciation, revaluation, subsequent and replacement of asset. Then we saw self-constructed asset, barter, all of that. All that comes during the time of purchase, inception in books. End of life, we saw derecognition points along with retirement. Are you understanding, guys? Clear? Understood AS 10? Okay, we have quickly revised and I think exactly 25 minutes we revised AS 10, guys. Fine, all of you understood. Now we will go ahead and do the sums. We've covered all the concepts. That's about it, guys.